The world's financial system is teetering on the verge of collapse, and there is an excellent chance, not a 99% chance, but a 50 or 60 or 70% chance, we could have a collapse of the financial system that everybody will see in the next 2 to 3 months.
Hi, I'm Kaiser Johnson with Liberty and Finance, and this is the Miles Franklin Weekly Special for September 27th through October 4th, 2022. 2022 Silver Maples, which will likely be the last maple to feature Queen Elizabeth II. Made by the Royal Canadian Mint, the silver maple is 4 nines fine and was the first silver coin made to that exemplary purity. It comes in tubes of 25, monster boxes of 500, and is available for $6.25 over spot. All our specials this week are IRA eligible, and if you'd like to learn more about a precious metals IRA, call us, and we'll be happy to help you in that process. Our number for all orders is 1-888-81-LIBERTY. That's 1-888-815-4237. We're available after hours and on weekends, and we look forward to speaking with you.
Hey everyone, this is Elijah K. Johnson with Liberty and Finance. And back with us today is our good friend, Bob Moriarty. Bob, thank you so much for joining us today.
We have very interesting conversations at important times, and there's some really serious stuff going on, so it's good timing.
It definitely is good timing. It seems like every time we have you on, I've said this before, but Bob, you were right. You've been calling this crash really since it started back in the beginning of this year. So your perspective first on what we're seeing in the financial system across the world right now. In the US, we're continuing to see a stock market crash. So your perspective on what's happening financially right now in the global economy, but also in the US.
Okay, let me backtrack for just a minute because it'll make things a lot easier to understand. There is a debt crisis in the world. The West has been operating on a debt-based system for 500 years, and there's far more debt in the world that can be repaid. And typically, governments always do the wrong thing. So when COVID hit, everybody poured money into the system, and that blew prices through the roof. But the issue of the debt being outstanding is still there. In my view, the only rational solution to the debt is to have some kind of jubilee, and you'll notice nobody's talking about that. But just this week, the pound blew up because the pension system in the UK was literally on the verge of collapse. Very few people understand this, but the bond market is far bigger than the stock market. And actually, I think it's probably more significant. When you have bonds paying 1% or 2% or 3%, which would be a very valuable bond now, and you've got inflation at 8 or 10%, you've got a system that's doomed. I did an interview a couple of days ago, and I was looking at the German PPI, and the German PPI of August compared to August a year ago was up 45.8%. The overall CPI in the Eurozone is about 10%, and that's catastrophic.
You mentioned the British pound collapsing. Can you kind of hone in on that? What really caused that collapse, and could we see it in other currencies?
Okay, great question. I mean, really good question. Here's what happened. Pensions were all promulgated on the concept that they were going to able to invest in bonds at 5% or 6% and 10%. And the EU went to negative interest rates. The US went to 1 or 2%. So the pension funds poured money into bonds, and that is a result of money being pumped into the system and inflation shooting sky high. Bonds have lost about a third of their value, which literally has put every pension system in the world on the verge of collapse. Now, what the British did is they literally threw money at it, and the British said, we will buy any bonds. But do you see the fatal flaw to the government going in and buying up the bonds?
I mean, that's obviously inflationary. If they just go in and buy back the bonds, then they're just inflating the system.
Exactly. They haven't cured anything. And in fact, what they've done is exactly what created the problem in the first place. We are seeing hyperinflation in a lot of areas. I'll read something to you. Somebody sent me. UK-based electricity prices just jumped 93% in a day. That's hyperinflation. Okay, so we're seeing deflation in real estate. We're seeing deflation in bonds. We're seeing deflation in the stock market. And we're seeing hyperinflation in the things that people buy and sell on a regular basis. The figure of ordinary people living right on the edge is about 60 to 65% in the UK, the EU, and Germany. And that means people are living day to day. And something as seemingly insignificant as blowing up the Nord Stream 2 could create a catastrophe.
And speaking of the European energy crisis, you talked about how the UK-based electricity just rose significantly in one day. We are seeing, as you mentioned, hyperinflation in the electricity market over in Europe. So can you expand on that? I know we talked about this last time, but it's a very serious issue. And if people can't, I mean, energy is everything, as a lot of people say. So if people can't pay for that, then that really poses a huge issue just for the well-being of people in Europe.
Well, not just Europe, but the entire world. Let me ask you a simple question. You know, I do this all the time. Is there an energy crisis? Is there a shortage of energy?
No.
Absolutely not. And that's what everybody forgets. Now, the cost of electricity in France is up 1,000%. It's up 860% in Germany. And I'll be candid, I don't know very many people who could afford to pay 10 times as much for electricity. But the thing that's terrifying is it's entirely voluntary, okay? The Germans had the ability right up until this week to go to the Russians and say, look, we don't like you and we're going to supply arms to Ukraine and you're the bad guy, but we've decided that the sanctions hurt us more than you, so we're going to skip sanctions. They had the ability to do that. They had the ability to turn on Nord Stream 2, and they chose not to do it. And I wrote a piece on March 1st that said Europe, NATO, and the US just committed suicide. So this is not a shortage of energy, even though there's a lot of foolish things going on. Belgium shut down a nuclear plant a week ago. France is going to shut down 3 nuclear plants between now and the end of the year. Now, candidly, if you're paying 1,000% more for electricity, why don't you leave the nuclear plant running? Okay, governments have gone totally insane, and the key to it is it's all voluntary. This isn't happening to them. This is what they're doing through their own stupidity.
It is definitely a lot of mismanagement, it seems like, with respect to the energy sector and governments right now. But where is this all leading then? And do you think the energy issue will also spill into the U.S.? I mean, I know just in the last few weeks, we're seeing gas prices rising again here in the U.S. Your perspective on that?
When you talk about gas, you're talking about natural gas, or you're talking about gasoline?
Sorry, yeah, no, gasoline prices, the price at the pump right now.
Okay, Russia produces 6 million barrels of oil a day. All they would have to do is stop selling to the West, and the price of oil would go to $200 a barrel. So NATO and the US and the EU are attacking Russia, but Russia has the ability to double the price of energy literally overnight. And they're actually being very nice about not doing it. But why we would continue something that's so self-destructive is just beyond me. Natural gas was available until this week. And what nobody realizes, you're an oil company, you produce a bunch of natural gas. What do you do with it?
Enlighten us.
Okay, you pump it to the markets where it's in demand. During the summer, you put it in storage. Okay, now a certain amount of natural gas is used for chemical feedstocks, to make ammonia, to make fertilizer, to make chemicals, to make pharmaceuticals. Okay, natural gas is a really wonderful product. That demand exists 12 months a year. However, during the wintertime, you get a lot of demand for heat. So what you do is you store from March until November, and then you consume from November until March. Europe is kind of okay for natural gas for this year. It's going to be cold. A lot of people are going to starve. A lot of people are going to freeze. However, they're going to survive more or less. But as soon as you take Nord Stream 1 and Nord Stream 2 offline, next year it's going to be a total disaster. And here's something that nobody talks about that's very important to understand. If you've got a chain with 100 links in it, how many of those links have to break for the chain to break?
One.
Okay. And that seems simplistic, but what it means is in a very complex system like the world economy, you don't have to break everything. All you have to do is break one thing. Now, what the Europeans are doing is everybody's gotten amazingly nationalistic, and they said, well, we're not going to sell you our fertilizer, and we're not going to sell you our firewood, and we're not going to sell you our gas or oil. And that's a dangerous thing to do because the system that worked prior to February is seriously broken now. And I see the United States taking actions that are really scary. The world should be working together to solve the financial issue and the energy issue, and it's doing exactly the opposite. One of the points I've tried to make 100 times, Europe needs Russia's natural resources. However, Russia does not need Europe. So it was incredibly stupid of NATO to participate in effectively what's an attack on Russia that has brought the world literally to the brink of a nuclear disaster.
It does seem like as the sanctions have taken place and how there's been less trade, the countries that are impacted are obviously the ones that were trying to hurt Russia, but they got hurt instead. And it seems like if we're going to continue to see less trade, then the price of everything just has to go higher. And that's what we're seeing is the price of energy going higher, and energy impacts everything. So the end result of this is just more and more inflation, it seems like.
That's absolutely true. And that's a very good way of putting it. Do you happen to know who Ed Dowd is? D-O-W-D. He was one of the guys who ran one of the important funds at BlackRock. He literally was managing 5, 10, $20 billion investments. He is an extremely savvy investor, and he's a very intelligent guy. And he's been talking about the dangers of the reaction to the flu. He just did an interview. Look up Ed Dowd, and you'll see the interview. He did a brilliant interview, and he was talking about, he lives on Maui, and he said people don't understand what's happened to the supply chain. He has some kind of fancy car. Okay, I don't know what it is. Could be a Porsche, could be a BMW, could be a Maybach, could be something. Obviously, he's filthy rich and he can afford anything he wants. He said that he had a mechanical problem with the car and it was going to take 6 months to get the parts and get a mechanic to fix the car. Things that we've taken for granted our entire life, like toilet paper, baby food, okay, gasoline, natural gas, have not only gotten more expensive, in some places you can't even get them. You cannot buy toilet paper in Germany now because of the price of electricity, the people who are manufacturing the toilet paper have gone bankrupt. Okay, so what's happened, and certainly the EU did this, the pension funds were on the verge of going bankrupt. So Liz Truss started throwing money at them and said, we've got an unlimited war chest to bail these people out. The Europeans have committed a couple of $1 trillion to bailing out the energy companies. And the strange thing is that doesn't solve the problem. The problem is not a lack of energy. The problem is where the energy is. And if the Europeans would say, look, the sanctions hurt us, but they don't hurt Russia, all they had to do is stop the sanctions. People are going to look back at it and say governments could not possibly have been that stupid. And unfortunately, they're going to figure out, yeah, governments can be that stupid. The theory of sanctions, and it's only a theory because we don't know, is the people that you put the sanctions on are hurt. And that's a good way to get them to change their behavior. During the 20th century, do you have any idea what world leader was in power longer than any other world leader? It would be Castro, okay, who took power in 1959. Because of the US sanctions, it made the Cuban people appreciate Castro more than if there had been no sanctions. Sanctions very often do exactly the opposite of what they should do. And the sanctions that the US has been putting on Russia since early this year have absolutely been counterproductive. And even though the EU recognizes how destructive the sanctions are to them, they don't change it. And that's totally insane.
I did want to take a look back at where we are here in the US and what is happening in the markets right now. This week, we have seen the Dow Jones go to about 29,000. So it's the lowest price we've seen really since the beginning of, the lockdowns and all the craziness we saw there. But your perspective on where we are right now in the stock market and where do we go from here?
I actually wrote about it this week, and I said that it seemed that we were having capitulation in the junior resource stocks and in the stock market and the British pound and the euro and the Canadian dollar and the New Zealand dollar and the Australian dollar. And the timing appears to have been correct. There was a snapback rally. The euro's up, the pound's up, the dollar's down, gold and silver are up. But I want to read something to you. We were hours from a pension system collapse this week. And the strange thing is that hasn't changed. You could throw money at it, it's still a problem. Contagion is spreading across the whole of Europe, quickly. Collapse happens slowly, then all at once. Risk is very high. Prepare. And you're absolutely correct. I mean, you and I were talking 6, 8 months ago about how there was going to be a market crash in the fall. And we have certainly had a market crash, and we've had a bond market crash. I had no idea the value of the US dollar would go up so much. The US dollar is a ticking time bomb. If you borrow money, you're in a foreign country, you're a company or a corporation or the government, and you borrow money and it's priced in dollars, that is a synthetic short against the dollar. And what it means is that if the dollar goes up, it costs you a lot more money. Now, the British pound was $1.40 earlier this year, and it's like 107 or 108 now. So you not only have had the collapse in the currency, but you got the increase in the value of the dollar, and you got the increase in interest rates. So the world's financial system is teetering on the verge of collapse. And there is an excellent chance, not a 99% chance, but a 50 or 60 or 70% chance, we could have a collapse of the financial system that everybody will see in the next 2 to 3 months.
And what might that look like? You're saying everyone will see it. I mean, right now, everyone is definitely noticing the bear market in the stock market. But what kind of collapse are you expecting possibly in the next 2 to 3 months?
The banks close, the internet down, Russia attacks US satellites, Russia attacks other countries. There are so many black swans flying around now that it looks like you're covered with an umbrella. There's some really bad stuff, and I'm not talking about cyclical stuff. I'm talking about once in 500 years stuff. Ed Dowd says the collapse of the financial system is going to be worse now than it was in 1929. And frankly, every broker under the age of 60 has never been through a bear market.
Now, it seems like a lot of people who are working with traditional, financial planners, their planners probably have no idea what's coming and have not experienced this before. So we can't give financial advice, but what is your opinion on that? Like what people should be looking at right now if they do have someone who's just a traditional financial planner who hasn't really experienced what is about to happen?
Well, here's what's really scary, and I'll be blunt. I don't know what's going to happen. Okay, I can hypothesize and I can guess. Okay, but the fact of the matter is, I've never been through anything like this. And some of the things like the pension funds, that's a lot bigger deal than anybody realizes. The pension funds are so big and so important that simply you cannot bail them out without going into hyperinflation. So we could see a very real chance of banks collapsing and going into hyperinflation and having food shortages and having energy shortages all at the same time.
Now, we've talked about this before, but if you could share with our viewers like your top ways then to prepare for such a crisis where even you're saying you don't know really how this is all going to play out.
Very good question. Under no circumstances do you want to take on any kind of debt, including margin debt. The reason that junior stocks have gotten creamed over the last couple of weeks has nothing to do with the price of gold or silver or their merits. It has to do with margin calls. Do not use margin under any circumstances for anything, and do not get into any situation where you're borrowing money. That could be catastrophic. And likewise, it's a good time, when people are bombing the crap out of you, it's a good time to be in a bunker. Some of the things that we've talked about for years, like owning gold and silver, Uh, if the banking system collapses, what are you going to do for food and fuel? And quite bluntly, I'm okay, because I planned on it for years. You could take that thing on the wall that you got and take a scissors to it. You know how much bread you're going to be able to buy? None. Okay. I will promise, and Scout's honor, you're going to see things the next 2 or 3 months. I'm going to see things the next 2 or 3 months that I don't believe possible. I am seeing things right now that I never dreamed of, and it's getting worse every single day.
Now, you mentioned using precious metals to purchase goods and food in the future. I think some people might think that's far-fetched, but it's interesting because what we've been seeing with respect to demand for precious metals and the premiums is that the most recognized products, the silver eagles and the junk silver, the 90% constitutional silver, the dimes and quarters, half dollars, the premiums on those have skyrocketed. We're looking at $14 over spot. I think actually $15 now maybe on the silver eagles. So that's maybe 80% above spot there. And then the junk silver also very high, around maybe $10 per ounce around there, but rough numbers there. But it seems like somebody is purchasing those and maybe preparing for a worst case scenario in that respect. But your take on that, how it seems like premiums across the bullion industry for American-made small denomination product is just going sky high.
That's absolutely true. And you know how much of a believer I am in being a contrarian. I have bought tens of thousands of dollars of junk silver at 80 cents on the dollar. There was a long period of time where coin dealers couldn't give the stuff away. Okay, literally, it was cheaper to take it and melt it. In 2000 and 2001, I was buying World War II silver nickels, and I'm trying to think what the percentage is. I think they are 35% silver. I was buying those at 40% off spot, because what can you do with World War II nickels? And the answer is not very much. But here's the key. You want to own things when nobody else wants them. I remember going into a coin dealer's store in Miami in 99 and 2000 and 2001, when silver got down to below $5 an ounce. And he had stacks of 100-ounce bars, and you could buy a 100-ounce bar of silver for $450. Barbara and I bought a 1,078-ounce silver bar from the Atocha. Spot silver was $5, and we paid $5.35 an ounce for a bar of silver going back to 1622. There are a few people who are aware that bad times are coming and they're prepared. But right now, you want to have some spare cash. You absolutely want to have spare food. You may want to have spare fuel if you can actually store it. But bad times are coming, and if you think the government's going to bail you out, the government created the problem in the first place.
Yeah, definitely. The government often creates the problem in the first place, and then they come in with a solution that just takes away your liberty. So it's important to, not rely on the government in this situation, and to, take back your sovereignty, own physical precious metals, so that you can protect yourself financially in that way. Your perspective then also, I know you talk a lot about mining stocks on your website. And it seems like during this downturn in the stock market, we've seen a downturn in the mining equities as well. So do you think that's going to reverse anytime soon? I know in the last couple of days, we've seen precious metals up, but the stock market continues lower. So I don't know if that's the beginning of a reversal there and a disconnect between precious metals and the stock market, but your take on that?
I think there is a disconnect right now between resource stocks and general stocks in the stock market. I think the general stock market is going to continue to collapse, even though it could have a dead cat bounce right now. But let's talk about bull markets and bear markets in resource stocks. If you own resource stocks in a bull market, what happens to them?
They go up.
Okay. In a bear market, what happens to them?
They go down.
Okay. You do not have to pick stocks. All you have to do is figure out which market you're in. And that's hard for most people because most people want to be part of the herd, and the herd is always, always, always wrong. We had a bear market in resource stocks that ended in 2001. We had another bear market in resource stocks in 2008. We had another bear market in resource stocks that ended in 2015. We are now in 2022. Now, what is the relationship between 2001, 2008, 2015, and 2022? 7 years between 2001 and 2008, 7 years between 2008 and 2015, 7 years between 2015 and 2022. Every 7 years for at least the last 20 years, resource stock investors have had an opportunity to steal legally. I remember in 2000 and 2001 buying dozens of stocks that had more cash than the market cap of the company. In 2008, there was something like 150 junior resource stocks that had more cash than the market cap of the company. I've been buying a stock literally this week that has 3 cents a share in cash, and I'm buying the stock at 3 cents. Now, how much risk is there in buying a $100 bill for $100? And the answer is zero. I believe we're going to have a market like we had in 2015, 2016. Between January of 2016 until August of 2016, the indexes were up 300%. A lot of junior resource stocks were up 1,000%. All you have to do is catch one of those in your lifetime, and you can retire. And I think that opportunity is there right now. And the strange thing is, I'm not saying go out and buy the very best stock, okay, even though there's 30 or 40 or 50 or 100 great companies. You can buy the biggest piece of shit stock in resources, and it's going to double or triple.
It'll be very interesting to see what happens there, and it seems like a very good opportunity there in the resource sector. We'll definitely have to wait and see on that. Any last thoughts before we let you go, Bob? And where can our viewers find you online?
Well, they can find me at 321 Gold and 321 Energy. And I've been doing a lot of interviews lately because there's some really scary things going on. One of the things that we didn't discuss, but we should at least mention, the attack on Nord Stream 2 was one of the most dangerous geopolitical decisions in world history. And when Europe figures out who is behind the attack, it's going to have very negative ramifications for the U.S.
All right. Well, Bob, thank you so much for your time. And I would encourage everyone out there also to see in the description of this video your Amazon author page. You've written numerous fantastic books, and actually one of them, Investing in Resource Stocks, that one is now available in hardcover on Amazon. So please check that out there. Bob, thank you once again for your time, and God bless.
Thank you. It's always a pleasure.
Miles Franklin Precious Metals is one of America's oldest and most trusted bullion dealers. Miles Franklin is A+ rated and accredited by the Better Business Bureau, licensed and bonded, and has 0 complaints ever registered. Here at Liberty and Finance, we are licensed brokers with Miles Franklin. To order, simply call us discuss your needs, and we will let you know our live inventory, prices, and availability, and lock in your order over the phone. Once your order is locked, the price is held for you regardless of market fluctuations, and the metals are reserved for you awaiting your settled payment. Within 1 business day of ordering, you will receive an email invoice detailing the order and payment instructions. Miles Franklin accepts payments by bank wire, ACH or electronic check, money order, check mailed priority mail, and cryptocurrency. The fastest forms of payment are bank wire and cryptocurrency. Upon settled payment, metals will ship out within 3 to 5 business days. You will receive tracking information via email. Domestic shipping charges are $15 for any order under 500 ounces of silver or 10 ounces of gold. For orders larger than that, domestic shipping is free. The package will be double boxed, fully insured, and labeled discreetly, with no indication of the contents inside. For your privacy, the name Miles Franklin will not even be on the package. To talk to myself, Elijah, my brother Kaiser, or my father Dunnigan, call 1-888-81-LIBERTY. That's 1-888-815-4237.